Good morning, everybody. This is Sunday, the 6th of February. The title that I have put on this video is Trading is Understanding Risk and Taking Control of Your Emotions. And taking control of your emotion is fundamental to trading. And funny enough, when you start out trading, you think 90% of trading are the indicators and 10% is you. As you progress in your trading career, you'll find out that 90% of trading is actually taking control of your emotions, not having opinions, having a solid trading plan, and 10% of the indicators. What I want to show you today is how to use the Hawkeye grabber to actually take profit out of a longer time chart. So we're looking at the 360-minute British pound, and I put the grabber on, and let me just show you the settings I have. So what I'm looking for is 50 ticks. So I'm looking 50 ticks, double that, 3 times that, 4 times that, etc. And what I'm trying to do is to get down to the yellow line. I call that the sunshine line, which is giving me a 3-to-1 risk reward. So that's 150 pips, and I'm prepared to risk up to the dotted line, which is 50 pips. So it's a 3-to-1 risk reward. Now, at any time that you see these longer term charts in trends, you might say, I can't take these longer time charts, I don't want to hold overnight. Well, what you can do is you can go in and change the setting in the grabber, and you can say, okay, I'm going to move that down to 20 ticks, and you can go and do it and place it on a single bar, let's just say, on the open there, and it'll take you straight down through. Let me expand that out so we can see it. Unfortunately, we're trying to get these videos into YouTube, so they have to be of a certain size. But I must admit, I do find it rather a restraint. So here on that single bar there, in a downtrend, the risk was in your favor. It was already an existing downtrend. You went short on the open, or whatever price you went, and you can see that it went down through the blue line, which is a 2-to-1 risk reward. If you had 3 contracts, you would take 1 off there. It then came on to the yellow, and you could have exited all contracts there, your other 2 contracts. But if you wanted to swing trade it and hold it for a longer time, you extend the grabber input out. So let's make it, let's say 75, and you can say, I want to hold this for a longer period of time, and you can go and put the grabber on from wherever you entered. And let's say that we came in on the open of this bar here, and you can see I'll be running that one down. And my rule is that if it touches the 2, I take 1 contract off. If it then comes back and closes above the dotted line, I exit the whole position. I'm now looking to take another profit down at the yellow line, and then I'm leaving the 3rd contract free to roam. And free to roam means it touches a level, closes above the previous level, I exit. So that is how we can use the grabber, and how you can use the grabber to exploit these very powerful long-term trends that we see for 2, 3, 4, 5 days on the 360-minute using the fat man. Remember that the green line is the euro and the brown line is the pound. You can see the pound starting to flatten out here. So it would be quite appropriate to say, because the pound is losing its energy, its momentum, I will be coming out of this trade. The next thing I wanted to show you is the swing trade. My video of last week was telling you that at this point here, the Egyptian crisis pushed the market down, but it was not selling. It was just a market momentum move, and sure enough, the buying volume came back in, and up it went, and we had a nice long that has taken us up there. That is the secret of volume spread analysis. You are looking at wide bars, you're looking at the range. A yellow blob came up. We then have the wide bar rule that comes in. No part of the next bar should be within the wide bar. That wasn't the case here. We're then looking for a hook. No hook came in, and a hook is an up bar, then a down bar. All the bars were up. Then we get a blast out, and then you get your signal here to go long. So that was that. And finally, I just want to show you a little technique if you want to trade the stock indexes quickly and you don't have time to sit there all day, if you go to the Hawkeye Gearbox, which remember gives you the exact timing, the amount of ticks to use each day. So the slow time frame is 296, the fast time frame is 74. So you can trade in harmony between these two. Let's extend out our KISS, which is telling us the advanced decline issues, whether the advanced decline issues are being bought or sold, and you can see that when these lines are just an inverse of each other. So when the red line is going up, the market's being sold, and when the green line's going up, the market's being bought. Now if we come over to our charts, you can see that we have we can't trade till after 45 minutes, 15 minutes after the start of the market, 9:45. So that comes in here. We can't take that trade because we're already too far into an existing trend. I would take it if the price pulled all the way back up here to the stops, but it hasn't, and in fact when it does, the trend goes white. And what I'm looking for now is to go long, and if I'm going long, let me just get the for some reason this isn't working correctly. Let me just get that working. That's better. So at this point here, you can see we are in an uptrend on the 296, and you can see that we are just going flat on the KISS as well. So our risk again is on our side, and we are looking to say, okay, how far can we go long? And because this is all in place, you can say, okay, I'm going to go and put my levels on, or my grabber on, and I'm going to take out a small run on this. And again, here we come here. The risk is on your side. You can see that the KISS is starting to turn up. The fast chart is pointing down. We've got to wait until some red volume comes in on the slow chart, and I have made the roadkill here with a setting of 4, so it's looking at 4 time frames greater than the 74, which is the 296, and sure enough we get our trend down, etc. And then right at the end of the day, you can see that the 296 is in solid uptrend. We're only interested in these longs, and there was very good money to be made in the afternoon session. So please take control of your emotions. Read Mark Douglas, Trading in the Zone. Read it at least 10 times. It's the most fabulous book about you and how to understand risk in the market. And great trading this week.